Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a reversal bar candlestick pattern. Now, at School of Trade, we have an indicator that plots this on the chart for you, but to make it a little less easy, right, we have to know what the pattern is before we actually just start using the indicator to make it easy. That way you know sort of the ins and outs. So in this case, we're going to be taking a look at the reversal bar. And the way that this works is essentially the way that a market structure high or low is going to be created in the market. And what that means is, in this example of an uptrend, you're making new highs, you're constantly making highs, but in this case, you make a higher high, followed immediately by a lower high. And essentially what you're looking at is a topping pattern. The market is shifted around. A lot of the times you see something like this, where you come up, make a new high, and then you make an equal high, right? And then the next candle may do whatever it wants. But that's not really a market structure high. We need a higher, first of all, a higher high, and then a lower high. Now, the same is true for a reversal bar on the opposite side of things, where you're going in a downtrend. In this case, you make a lower low, immediately followed up with a higher low. Now, again, same concept. You don't want to see a double bottom. In this case, there's not really an example, but you don't want to see a double bottom. You want to see that specific low into a lower low into an immediate higher low. Those three candles showing a bottoming pattern. Now, you can see this on pretty much any chart you want, whether it's a tick chart, a minute chart, whatever you want. In this case, I've just got a standard 5-minute chart. And right here, if we zoom in on this, you can see this is exactly what we were talking about. We make a high. I'm sorry, erase that one. We make a high above this previous high, so it's a new high, into a higher high, immediately followed up with a lower high. That's a topping pattern, essentially showing you that the market is going to start rolling over. Now, you can find these, like I said, pretty much everywhere, and what we'll do is we'll hop over to the next example really quick, which is going to be right here. So let's zoom in. And just like we saw before, but on the opposite side of things, we're moving downward now, and we've broken new lows, and we're consistently making new lows here. And this is what we're looking for. We make a lower low, immediately followed up with a higher low. And that's giving you that bottoming pattern. That's showing you that the market's going to start turning around and trending, and maybe not, all day. It's not going to be a full reversal all the time, but a lot of the times it's going to be where you start seeing profit taking on a down move, or on the opposite side on an up move. It's just kind of a warning that you're going to start seeing a pullback. Now, conversely, the things that you don't really want to see are those double tops like this, right? Now, in this case, we didn't make a new high. That's fine, just an example purpose. We make a high, and we don't really make a new higher high, right? We just make a double top. Now, in this case, it did end up falling off, but these double tops like this, that's not what we need to see. We need to see it physically make. If this would have gone one tick higher on the wick, that would have been a higher high, and that would have been good for that reversal bar to show this rolling over. In this case, didn't quite get it, still fell off. But that's not the exact pattern we're looking for. So that's going to be the reversal bar in terms of candlestick patterns. So if you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. Have a good one.